Thanks for joining me here at NTD Business. I'm Don Ma. Stocks ended lower on Thursday. This is after U.S. Treasury yields went higher on news that the Bank of Japan will allow long-term interest rates to rise. The chief investment strategist at Simply Asset Management said reports of the Bank of Japan's plans were the biggest driver behind Wall Street's performance on Thursday. Higher rates in Japan pushed the 10-year U.S. Treasury yield over 4% and reduced the attractiveness of stocks. The S&P 500 lost 28 points, or 0.6%. NASDAQ lost 76 points, or 0.5%. The Dow lost 233 points, or 0.6%. The Dow ended its 13-day winning streak, which was the longest streak in 36 years. And U.S. gross domestic product increased at a 2.4% annualized rate last quarter, according to the Commerce Department on Thursday. The economy grew at a 2% pace in the January to March quarter. The U.S. economy grew faster than expected in the second quarter. This is as labor market resilience underpinned consumer spending, while businesses boosted investment in equipment. Consumer spending, which accounts for more than two-thirds of U.S. economic activity, increased at a 1.6% pace in the second quarter, though the pace slowed from the first quarter's robust 4.2% rate. But some economists remain convinced that a recession is still on the horizon, arguing that higher borrowing costs will eventually make it harder for consumers to fund their spending with debt. And the Federal Reserve is once again raising interest rates. Let's take a closer look at what this means for you.
1 month after a pause, the Federal Reserve is raising interest rates once again to the highest level in more than 20 years.
We took another step by raising our policy interest rate a quarter percentage point. We've covered a lot of ground, and the full effects of our tightening have yet to be felt.
On Wednesday, Fed Chairman Jerome Powell announcing its 11th rate hike since last spring. That's despite data showing the economy is holding up and inflation is softening. The latest consumer price index shows prices are cooling down. In June, that index rose only 3%, a much slower pace than the high of 9% the same month last year, which was a 40-year high.
Consumers are hanging tough. Part of that goes to the job market. Unemployment is very low, 3.6%. You've got to go back, 50, 60 years to see an unemployment rate consistently this low.
So, what does this mean for you? Economists say the biggest impact will be on borrowers because the Fed's benchmark lending rate impacts car loans, credit cards, and mortgages. For people looking for a home loan, this latest round of interest hikes means they'll pay more for their property. The historic series of interest rates have sidelined many would-be homebuyers, and there's no guarantee relief is coming anytime soon. Economists say more rate hikes could be ahead this year.
Inflation is still too high. The Federal Reserve is raising interest rates aggressively to slow the economy and get that inflation back down.
Now, if you're planning a trip before school starts, plan for higher gas prices because prices at the pump went up 12 cents in 3 days. According to AAA, the national average for regular gasoline climbed 2 cents Thursday to $3.71 a gallon. Now, this is the highest in 8 months, but that's still below the painful levels of last year in June of 2022. Gas prices hit a record of more than $5 a gallon. The sudden spike is partly due to a jump in oil prices as recession fears fade and OPEC cuts production. Another potential issue is extreme heat. Some refineries, including at least one ExxonMobil facility, have had to undergo maintenance in recent days because of the extreme temperatures. And Meta Platforms on Wednesday reported a strong rise in advertising revenue, topping Wall Street financial targets for the second quarter and forecasting third quarter revenue above market expectations. Here are the details.
Shares of Meta Platforms surged on Thursday thanks to the promise of artificial intelligence. The Facebook owner was set to add about $60 billion to its market value a day after it reported strong second quarter earnings and a rosy revenue forecast that showed AI was helping Meta boost engagement and ad sales even in an uncertain economy. That compelled 18 analysts to lift their target price for the stock, which has already more than doubled this year. The tech giant's focus on cost cuts and higher engagement through AI has helped Meta turn into a Wall Street darling this year after being derided for much of 2022 for its hefty spending on the ambitious metaverse. Meta's results were also supported by an improving monetization of Reels, a short-form video format that is the company's answer to TikTok. CEO Mark Zuckerberg said Reels now has an annual revenue run rate exceeding $10 billion, up from $3 billion last fall. Along with Meta, earnings from Google parent Alphabet this week also reflected a recovery in the digital ad space. Meta and Google are on track to add around $160 billion to their combined market cap, a figure that is more than the individual market values of about 90% of the companies in the S&P 500.
China is helping Russia evade Western sanctions and is likely providing Moscow with military and dual-use technology for use in Ukraine. This is according to an unclassified U.S. intelligence report released on Thursday. The assessment by the Office of the Director of National Intelligence was published by the U.S. House of Representatives Permanent Select Committee on Intelligence. The report says that customs records show Chinese state-owned defense companies shipped navigation equipment, jamming technology, and fighter jet parts to sanctioned Russian government-owned defense companies. It also said China had become an even more critical partner of Russia after Moscow invaded Ukraine last year. Meanwhile, a U.S. judge on Wednesday tightened Sam Bankman-Fried's bail conditions by restricting his ability to communicate publicly, and said he will consider jailing him before the trial over the collapse of his FTX cryptocurrency exchange. Here are the details.
Disgraced former crypto mogul Sam Bankman-Fried could be jailed before the start of his trial over the collapse of the FTX cryptocurrency exchange. A US judge on Wednesday tightened Bankman-Fried's bail conditions by restricting his ability to communicate publicly and said he would consider jailing him. At a hearing in Manhattan federal court, prosecutors said that Bankman-Fried, popularly known as SBF, had crossed a line that was over his sharing with a reporter of his former romantic partner Caroline Ellison's personal writings. Prosecutors claim the move amounted to a second instance of witness tampering. They also cited a January 2023 email to FTX's US General Counsel in which Bankman-Fried proposed entering a, quote, constructive relationship. Ellison is one of 3 former members of Bankman-Fried's inner circle who pleaded guilty to fraud charges and agreed to cooperate with prosecutors. She's expected to testify against Bankman-Fried. Mark Cohen, a lawyer for Bankman-Fried, said his client was trying merely to protect his reputation by communicating with journalists, adding it would be, quote, almost impossible to prepare for the October 2nd trial if Bankman-Fried were jailed. Bankman-Fried has been largely confined to his parents' home in Palo Alto, California, since his extradition in December from the Bahamas. That was where he was arrested and where FTX was based. He's pleaded not guilty to charges he stole billions of dollars in FTX customer funds, in part to plug losses at his crypto hedge fund, Alameda Research.
And the end may be close for Yellow Corp, a nearly century-old trucking company with 30,000 employees. The company narrowly avoided a fatal strike by the Teamsters earlier this week after Yellow missed payments to pensions and healthcare funds. According to a report by industry trade publication Freight Waves Wednesday, the company's entire sales staff was told that their last day would be Friday and that a bankruptcy filing will come July 31st. The Wall Street Journal reported that the bankruptcy filing would come this week. All these reports sent shares of Yellow plunging 40% in early trading Thursday. And when asked about reports of an imminent bankruptcy, the company only said it is weighing all